Yes, I know that was a lot. ETFs, index, this and that. Let me just simplify it a little bit for you. You have the overall index. You have the S&P 500, and like I recently mentioned, you have the Nasdaq index. If you're looking at the historical performance of these index and you're like, you know what? I like how all of these companies in the index has been performing, and I like the breakdown as to the sectors for these different indexes. Now, if you want to be able to purchase or invest in this index, you can purchase what we call the SPY ETF for the S&P 500 and the QQQ ETF for the Nasdaq index. Now, you will find out there are several ETFs that track those indexes. So it's not just limited to this SPY ETF or the QQQ ETF. You will see there are a lot more. So I am going to help you, give you the tools so that you could evaluate the different ETFs and you could choose which one may be suitable for your investing portfolio and your investing strategy. So when evaluating exchange traded funds, you want to focus on a few things, but here are two important things that you want to focus on: past performance and expense ratio. So let's take a look at this example from ETF.com. Now, this is a site where you could do research on different ETFs that you found out on, but we want to take a look at these two examples. So first we have the SPY ETF, which tracks the S&P 500. But we also have the VOO ETF, which also tracks the S&P 500. So at the time of making this video, the prices for the ETFs may not match what they are currently when you are watching this video, but you can still follow along. So here you have the SPY ETF, which was last traded at $421. So that means in order for you to purchase one share of this, you would have to pay $421. But here are the main things you want to focus on. You want to look at the issuer. So this one is called State Street Global Advisors. For the people within Wall Street, for the people in the financial world, we know that State Street is a solid company and they've been providing ETFs and investment opportunities for a very long time. But you want to pay attention to the expense ratio. Expense ratio to own this is 0.09%. So let me explain expense ratio a little bit. When it comes to expense ratio, this is essentially how State Street Global Advisors make their money. So similar to a mutual fund, if you own a mutual fund, there's a strong possibility that mutual fund will charge you between 1 to 2%, if not even more. With State Street, they are charging you 0.09%. Now, this doesn't mean they're going into your account and they're taking out the money from your account. No, this will be subtracted in your brokerage account from the overall performance. So let's just say you purchase a SPY ETF and the S&P 500 goes up 10% from since when you purchase it. At the end of the year, when you view your account, you're not going to see that 10%. You're going to see 10% minus 0.09%. So essentially, when you open your brokerage account, you will see SPY has given you a 9.91% return. And then in the bottom here, you're going to see number of holdings as 505 companies. As I've said, the S&P 500 contains 500 companies. Sometimes it's a little bit more than 500. Sometimes it's a little bit less than 500, but you're within that ballpark. So if you're looking at the VOO ETF, what you notice is that the issuer is Vanguard. And Vanguard is well known around the world and a well-respected financial institution. You will see that Vanguard's expense ratio is actually slightly less than the SPY ETF. So now that we've looked at the expense ratio and we understand how does that impact you, let's take a look at the past performance of these two separate ETFs. Now, let's start off by saying past performance does not guarantee future performance. But this at least gives you a gauge to understand how this asset class has been performing over the last year to 2 years to 10 years to 20 years. So like I said, at the time of this recording, the prices may have changed, but let's take a look at how the S&P 500 has been performing. So year to date, we are up 12.75%. In the last year, it's been up 17%. The last 5 years is up 10%. The last 10 years, it's up 11%. And you're going to see very similar results for the VOO. Now, you may ask yourself, well, why, if they're contained in the same 500 companies, why isn't the performance the same? Well, the performance is not the same because the different allocation, the different percentages. So if Microsoft is 7% in one, and then Microsoft is 6% in the other, then the performance will not be the same, but they're very close. So if you want to know what, if you were to own this over the last 10 years, you look at the performance and you can see that your money would have grown 11%, 10%, 9% for the last 10, 5, and 3 years. Now, historically, the S&P 500 on a compounded annual basis has provided anywhere between 8 to sometimes 12%. So that doesn't mean the S&P 500 will go up every single year. Some years might be 20%, some years might be 1%, some years might be negative. But when you average it all out, historically for decades, the S&P 500 has provided between 8 to 12%. And let me tell you, this beats inflation. So let's take a closer look. These are the top 10 companies within the SPY ETF and the VOO ETF. We have Apple, we have Tesla, we have Meta, we have Google. SPY has United Health, VOO has ExxonMobil, but you can see the difference between these is very slim. So if you were to invest in any of these, you could go to ETF.com right now. You could look at the holdings to see what it's updated to look like. And this will tell you these are the top 10 companies that you will be investing in if you were to invest in these ETFs.